By the way, this document I'm showing you, you can find it at the link below this video. This is actually from a government site, or government sites. It's just that all this reading could be overwhelming for you, and so I'm simplifying it in these videos, and I'm providing you the link to my actual source of information, these government documents below the video. So one of the most important part of um, Obamacare, one of the most important part for you is how the government is going to pay your premium, and it's through the premium tax credit. And pretty much, premium tax credit, the premium is the health insurance premium that you pay, the monthly payment, right? So that's the premium. Tax credit is, money you get back when you file your taxes. However, the premium tax credit, there is also a provision, and this is really good, that you don't have to wait till tax filing time to get back your money. Actually, there's a provision where the government could actually pay the insurance company directly, so that you don't have to wait until tax time. So let's get right to what matters in terms of how much the government actually can pay for you, can pay your insurance premium. So this is an example of a family of four with the income of $50,000 a year, and that would fit under 224% of poverty level, of federal poverty level. So they would, and um, you qualify for this premium tax credit if you are within 100% to 400%, from 100 to 400% of federal poverty level. The link to calculate that would be below this video. But yeah, again, this example, $50,000 income of a family of four would be considered 224% federal poverty level, which qualifies this family. Another very important note is that you must be choosing a qualified health plan through the government exchange in order to qualify for the premium tax credit to get the money back that you pay for your premium. There are commercial exchanges bringing up right now, and you may not be able to qualify for the premium tax credit if your choice is not from the government marketplace or the government insurance exchange. So be aware of that, and so make sure that you're choosing the insurance from actually the government exchange sites. Okay, so back to this example, family of four, $50,000 income. So if the insurance, so if you choose the insurance, the benchmark insurance, that costs $9,000 a year, and $9,000 a year would be $750 a month. And so this plan costs, so it's $9,000 a year. The government, in this case, would pay $5,430 through the premium tax credit. And so $9,000, which is the cost of the premium, minus $5,430, which the government pays by the premium tax credit, would equal $3,570. And so this is the actual amount this family pays, $3,570 that year, which is $297.50 each month that this family pays for they actually pay for the monthly premium. So again, keep in mind that this is just an example and it's an estimate. Every case is different with differences in income, differences in family size, and differences in choice of insurance plan, and and a lot of other factors varies. So this is just an example, and so I noticed that this says here, in this example, they choose the benchmark plan. So the benchmark plan is the second to the cheapest type of insurance in the exchange. So the plans can be categorized into four different levels: bronze, silver, gold, and platinum. And obviously, so bronze is the cheapest, but it's so it covers the least, right? And generally, and platinum generally have better coverage, more extensive coverage, or more coverage. And so the benchmark plan is silver. And so back to the example, this example, they chose the silver, the benchmark plan, and in this case, the plans vary in prices, but this is just one example. This plan costs $9,000 a year. So let's look at the example of the same family of four. If they choose the less expensive plan, which would be which would be the bronze plan, right? Or the bronze level. So the premium tax credit that they get is the same amount as as if they choose the benchmark plan. Although they're not choosing the benchmark plan, they still get the same amount, the same premium tax credit, $5,430. And so if they choose the cheaper plan, the premium for that plan, in this case, is $7,500. So the plan costs $7,500, and minus $5,430 that the government pays through the premium tax credit, and the result is the family pays only $2,070, and that would be $172.50 per month for this family of four that they actually pay for their health insurance premium. In the next video, I'm going to review some key points, such as key points of who qualifies, and I may actually provide more details of qualification that I may not have mentioned yet, and I may provide some new points that I may not have mentioned yet, such as example of older Americans above 54 um, who who have higher insurance premiums, because the insurance companies generally charge them more, and so they get a higher premium tax credit, or the government pays more for them, and I'll give you a sample calculation of that example in the next video.